folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What is going on? Good morning, everyone.
Good morning. Welcome back.
Yeah, welcome back. How's everybody doing?
Another live.
Got my coffee. I'm ready to go.
I
Some setups for you all today.
Kind of make my coffee. Yeah, where's everybody from this morning? Where are we from? What pairs are we looking at?
Yeah, drop your locations. Drop any pairs you guys are looking at. Who knows? Maybe we're looking at the same thing. We'll take some requests for some pairs to go over. We have a few of our own. You guys have been following along live sessions on Saturdays. We dropped a few setups that have played out quite well. Those of you who are in the VIP, having another great week so far. We are currently floating on the VIP track record. Everything has been calculated down to the 0.1%. We are up 23.3% this month. And then the ones from the live sessions, because we only have them twice a week, so it's only 1 to 2 hours a week that I get to talk to you guys. Currently up 7.65, so not terrible for the live sessions. So as long as you guys are taking advantage of those, you should be making money. All right, guys, remember, I don't do gold. I don't do anything but Forex. So please do not ask me about
No indices
or anything like that. No, Paulo, not yet. I'm working on it. I'm working on getting something. It's going to be cool, though. Stay tuned for that. I'm trying to get a nice backdrop for my wall back here. So we'll see. Nigeria in the house. Where are you guys from? Come on, let's get this chat going. Good morning. Happy Wednesday. Happy hump day. I literally just
put in gold.
I'm not trading gold. I'm not trading commodities.
No gold, no US 30, guys. Sorry. Just
FX. All righty. Let's see. Wow, let's get this chat going.
So far, we got one person from Nigeria. Where is everyone else from? Give it a couple more minutes.
I knew we had South Africa in here. We always have South Africa.
Always do. Never fails.
Welcome. Yep. Welcome in.
Got multiple South Africa. Tons of Forex traders in South Africa. What's going on down there?
USD CAD. Yeah, I can talk about USD CAD. Trinidad and Tobago.
TNT.
TNT. Florida, Romania, RSA. Very nice. Guys, remember, nothing but Forex. That includes NASDAQ. It's just Forex pairs, currencies.
People love indices. I don't know why.
Just as a reminder, just because indices move a lot doesn't mean you should be trading it. You have to understand how those asset classes work before trading it.
Well, we got Croatia, Singapore, Kenya,
Colombia, Croatia.
Tanzania.
Yeah, nice.
Yeah, Robin, I know it's a joke.
GJ. USD ZAR. Oh, that's, you're right. That is a Forex pair. However, I just don't trade USD ZAR. I've never really traded it ever. So unfortunately, I won't be going over that. Buy XXX Chef. we'll talk about some chef pairs. Yep. We'll talk about some chef pairs. Sweden, Mozambique, Zimbabwe, Uganda. Nice to have you guys on today. Thank you for your time. GBP USD. GU, yeah, we'll talk about GU today. We have a lot of great trades that we're currently in and some setups that we can give to you. Amsterdam. Aiden can talk about his time in Amsterdam.
I can hardly remember. Got a lot of Africa in the house this morning.
That's right.
Love to see it.
Took a nice trade yesterday on GU. Was it a long? Hoping it was a long. Dollar is weak, ladies and gentlemen. Don't want to fight it. All right, we'll give it 2 more minutes, then we're going to get started here. Just a couple of updates. Remember that course that we talked about? The sort of all-encompassing course that will be provided to our VIP community that will kind of go over everything or all of our courses tied together. It's going to be pure application based. So, the terminology, the concepts, the components, everything like that have been a part of our original course material. Obviously, we do teach you our strategy in that and teach you exactly how we lay it out step by step in sort of a streamlined way. And we teach you, how to kind of tie it all together. But this last course that we're creating is going to be pure application. So it's not going to talk about the fundamentals or the components or the individual terminology, because you should already know that through the courses. This is going to be straight application to where we're going to be literally taking blank charts, breaking them down, and we're going to have tons of examples of how to do that. Because obviously, guys, I get a lot of questions about the very broad questions, and it's sometimes hard to answer because there's no step-by-step way to go about trading down to a T. Everything is different. Every single setup is different. So we have to understand overall the general, overall components will be the same in terms of structure, in terms of liquidity, in terms of volume, in terms of supply and demand. However, the little tiny nitty-gritty details, it's not always going to be the same. So we're going to be coming out with a lot of just individual examples within that course to really help refine your trading. So you're not confused as to anything. You kind of know how to go about a blank chart. Obviously, it's not going to be pretty every single time because you guys are still learning. However, over time, guiding your trading through that course will definitely help you. But of course, that will be provided to you 100% for free for our VIP members. Those of you who are not a part of our VIP crew, wish to get involved, we're sending out these trades and you have our track record to prove it. We're up 23.3% to start the year. So starting really strong here, and we don't have any plans of slowing down. So definitely head over to my website, arielfxtrading.com. Just book a free call with me. That's all I require. That's it. Just I want to talk to you more about your trading and just see how we can best help you. Because at the end of the day, we're here to help you grow. And that's it. That's why we do these lives for free to give you guys a little bit of help. But if you want to take it a step further, you feel, you're not really understanding it, or you're not, all the way there with your trading, well, then I would recommend, potentially introducing mentorship into your trading journey. But if not, if you guys are already profitable and just looking for refinement, well, then I'd recommend prop firm challenges. Those are very helpful. However, you got to treat prop firms as individual trades, in my opinion, right? Just like we build confluence for a specific trade, you got to build confluence for a prop firm. What do I mean by that? Well, just like a trade, if you don't have all your confluences there, what's the probability of you actually probably winning that trade? Probably not as high. Same thing with prop firms. If you don't already have some sort of track record built, or if you're not already consistent, what's the probability of you actually passing that? Probably not so high. You got to delay the gratification, get the experience, get the practice in. And then when you feel comfortable, then yeah, you can do it. So many people like instant gratification. That's why a lot of people lose. It's all a long-term game.
If the only thing you're relying on for your prop firm is some signal provider, then that's not enough confluences for yourself, guys. Right. Got to make sure you build out the skill set yourself, set yourself up for success, self-sufficiency, and not rely on handouts from other people. So at the end of the day, handouts are going to make you rich. Right. It's as simple as that.
Yep. That's it. It just takes time. Nothing comes easy. Nothing just comes instantly. So, all right, guys, we're going to go ahead and get started here. We have a good amount of people on here today. I'm going to go over some pairs, just kind of just talk about them. I really don't have a ton to go over. However, I do have a couple of good setups I want to discuss with you all. And then I'll pass it off to Aiden. All right, let me know. Can you guys see and hear me? Aiden, we good?
Yeah, I got you.
All right, cool. I'm going to remove you here. Let's go ahead and get into it. Oh, I'm right here. Sweet. Okay, so if you guys recall from, I think it was last Wednesday's live session, I mentioned that we were looking at coming into this level of supply. Now, why is this supply right in here, right? We have swept descending liquidity. Imagine 1, 2, 3, 4, 5 touches. Who is selling in here? A lot of retail traders are selling with this trend line. So we run the liquidity. We actually come up into another level of supply to the left. But anyways, we fall. We're still within this bullish structure, however. But this is the last buying volume before the structure was broken. Okay, so that will flip from demand to supply. And that's exactly where we wanted to come into this and hedge our positions, because we still are long from these levels down in here. We have taken a lot of partials off the table. I have taken the majority of my partials, or the majority of my positions off the table within these three. I have one here, I have one here, and I have one here. So a good amount of partials for each position have been taken off when we got back up into that level. However, we are still holding in case we ended up going long. But the reason why I'm hedging is because we're not making higher highs, but we're not making lower lows. We're sort of wedging ourselves. We're kind of trapped at the moment. So we have areas of demand that we're reacting from and areas of supply at the same time. So I am in both of these positions. I'm holding both of these three, and I'm actually in 2 short opportunities. One was from last week. So last Thursday, I called this out. So I talked about it last Friday. And then on Saturday's live session, I discussed this opportunity. The fact that, yes, we didn't quite clear this previous low in terms of closing below it, but we can see that we swept a lot of liquidity. We failed to generate that higher high. We repriced and we continue. I think the repricing looks better on the 10-minute. This is where you just have to flick through the time frames, guys. There's no time frame that's better than one. You know, it's always just through flicking through and just seeing different perspectives. So that would be that level of supply, that repricing that could potentially take us lower. We can see that we're starting to shift trend. And we can see that we've already reacted from the higher time frame level. So this would be a really good additional entry opportunity, probably reducing risk a little bit, and then looking to continue short. So that's exactly what happened. We created more descending liquidity to start the day. We had 1, 2, 3, 4 touches of that descending trend line. So a lot of people were probably shorting at that level. We swept liquidity. And again, we created that huge buy to sell into this level. Stops are put at break even as they are put at break even on this position that we have in here. But we're also looking at continuing to trade this. So guys, when you take partials and move stop to break even, a general rule of thumb is when you take out the previous high or low, that's just a good sign to move stop to break even, take partials. Any partials taken after that is based upon what the market is telling you. Meaning, let's just say, and I know I don't really have anything for this because it's really just, you know, there's really no other area to take partials from. Maybe probably, you know, somewhere down in here or down in here, potentially. It's just asking yourself, okay, if you're in a short, right? We're shorting off. Okay, cool, great. We're making money. But now we have to think about it in terms of, you know, have a professional mindset. Where could price, if it's going to go against me, if it's going to go long, where would it do that? Right? So it would do that maybe around this level, maybe around this level. If it ends up breaking and making an overall lower low, well, let's look at the higher time frame structure. Well, overall, we swept massive liquidity, higher time frame from the beginning, or well, kind of mid to late 2022. We repriced and continued long, right? So if we have that overall pullback, who knows? We could easily just continue to die. I don't know that. Who knows, right? So where could we be taking partials to where we don't have to worry about, you know, getting stopped out at break even too soon, or, you know, even losing the trade? Well, 1.0730 would be that level in which, you know, we could sweep all this liquidity here and then come back down into that higher time frame level of demand. That would be a good overall take profit. So it's just asking yourself, where could price potentially reverse from you? Those are good. That's a good indication that you know what you're doing in terms of trade management. So going back down to the 15-minute, like I said before, or actually the 10-minute, you know, we are continuing to push down. We are in this counter trend downtrend. So I'm going to continue to look to sell this. If we get a push and rally back up to the upside here, I'll be looking to sell that. Yeah, I have the risk to reward. So there's your signal, I guess. Usually I don't provide that just because we don't do signals. 1, 2, 3, 4 touches. How many people do you think are buying off of this trend line? Probably a lot. And we can even just see shoulder, head, shoulder. Could be a fake out to go long potentially. So that's why I think that selling from this level, it would give me conviction that we are going to rally short continually, right? I don't know if we're going to absolutely just die, but at least if we get below the previous swing point, I can move stop to break even and take partials. So if it comes back up to the upside, I didn't lose any money. I made a little bit, but we also have the potential that we actually do just continue. So building confluence around trades, even if it is counter trend, is so important. You can't just trade counter trend for the sake of trading counter trend. There's so many people who, let me just go to Euro USD here. I think it was right in here, and I'll talk about EU in a little bit. So many people thought this was a break of structure. So many people did. Oh, we broke the previous swing point. Oh, we're going to pull back and go short. This is where common sense just kind of comes into play, guys. And it just takes experience to kind of understand this and just be patient with it. But where are we going? I mean, let's just be honest with ourselves. If I just zoom out, where are we going? We're pushing up. We're going long. The market is bullish. We don't want to be so quick to find a reversal, right? Being so quick to find a reversal, you're probably going to take more losses than you are wins. If you find excuses, not excuses like I'm just going to buy it randomly, but you find confluence for buy opportunities, well, that's most likely going to play out for you because you're trading alongside the trend. So just remember, throughout the month, there are 22 trading days. 22 trading days, not counting weekends. You have 22 days to make money in 1 month, right? And an average, good return for manual trading, I would probably say is about 5 to 8% per month. If you're using really good risk management, that's a really good return. Compounded over time, consistently, month after month, year after year, you're going to be wealthy if you do everything correctly. But you have to have that professional mindset right off the bat, right? 20, 30, 40% months, not realistic for the average trader. It's really not. But that's what everyone tries to do because they only aim for the monetary growth, not the percent return growth, right? You wouldn't want to place risk that would try to get to 20 to 30% a month on a $10 million account. It's just kind of dumb. You don't have that kind of risk on that large capital. So why do it on a $100 account? You got to build the right habits. So people are so quick to judge, potential reversal formations. We're just continuing to trade with the trend. So I sent this out last night for everyone in VIP. There was a potential trade idea in here, and I'll talk about it in a second. But essentially, higher high, higher low, higher high, higher low. We have come into, I'll just go down to the 10. We're continuing to push higher, right? Higher high, higher low, higher high, higher low area. This is like a 10-minute level of demand. We mitigated that level. What do we make? Higher high next. Where is the next level of demand, if there is any? Well, we have a gap there. We have a demand level in here. Not always will there be a demand level or a sponsor candle in the correct trend, right? So even if we're trending, yes, you would naturally want to see a pullback to continue, but there's not always going to be a perfect setup. There's not always going to be a clear level of demand or supply or a clear sponsor candle. So that's why we still have to build confluence. Yes, we are bullish, but it doesn't mean we have to just buy everything, right? We can see here, this is a low, this is a high. We failed to generate a lower low, obviously, because we're in an uptrend. So that was that repricing higher time frame, just sort of more reaccumulation, and then we continued. So that would be that level of demand in which you like to take off of. So let's see. We initially had that reaction. However, we never really had much follow through. We kind of reacted off of the prior supply zone. So, it was a little bit tricky. Even if you were to gotten in this position, you could have put stops at break even or just, left it below the previous low. But anyways, what did we create? We created this trend line, 1, 2, 3, 4 touches. So retail is buying within this trend line, obviously creating liquidity prior to continuing long again, right? So how do we go about doing that? So retail traders, they place their stops to say right here. So how many times, and this is sort of like just a rhetorical question, how many times do you experience or have experienced, maybe not now, but in the past when you first started trading, the fact that the market seems to just be trading against you and you specifically? Like it comes down, hits your stop loss to the T, and ends up going in your direction. I've had that experience when I first started. I'm sure a lot of you guys did. And the reason for that is we were a part of the masses. We were a part of the overall liquidity and overall volume of the market that the institutions wanted to just go take. So why not understand that it's not us who moves the market. It's not stupid trend lines and wedge patterns and candlestick formations. It has nothing to do with that. That's not how any market moves. It has everything to do with big capital. Where are the whales getting in the market? Well, they have to place large amounts of orders, which requires liquidity. So they need people on the other side of the market in order to take liquidity from or free up liquidity in order to continue long. So if everyone's buying here, they're placing their stops below the low. Well, what a stop loss is essentially, like I said before plenty of times, if you're buying, that means you're willing to sell back your position to the market at a lower price because you want to get out of the position because you think that if it hits your stop, it could easily just continue lower. So they are forced to sell back their position to the market upon that stop loss that's maybe placed below this trend line. So when they are forced to sell back their position, now the institutions have someone to buy from. So now the liquidity is freed up, and now there's tons of liquidity below here, and they can rally to the upside. That's why these strong moves occur. That's why this liquidity purges happen at specific times of day and specific levels. So we've come into this level of demand, we've swept liquidity, sell to buy, and then that repricing that we always like to see, right? Repricing essentially, guys, is just another fancy term for when did supply flip to demand or demand flip to supply. In this sense, look at the counter trend: low, high, low, high. You see this candle here? That was the selling volume that failed to generate a lower low within this counter trend downtrend here. And that's where we stopped and formed that higher high. So that will flip from supply to demand. So that's exactly where we wanted to take our position from. We broke the counter trend structure. We pulled back. We actually had a little bit of liquidity prior to London session. Actually, this was London session, 3:50 a.m. Eastern. And we rallied short. We can see a little bit of accumulation, lower time frame, and now we're starting to expand. Yes, we have broken out of this trend line here. And I just created this trend line just to show that, retail is probably selling. We have 1, 2, they're probably selling upon this third touch here, right? Something like that, just to show where liquidity is. I can get rid of this now because it doesn't matter. But if I scale and maybe to the 1 minute time frame, we can see the accumulation in here, accumulation schematic. Now, I don't like to trade 1 minute time frame. It affects my psychology too much in terms of having to lose more trades than you win, even though those wins can be huge risk to rewards. I just don't like it. I like to trade more intraday, intra-week. But the same concepts apply, right? That's exactly what you can be looking for. So the 10-minute time frame is exactly what we had in terms of entry. If you go out to the 15-minute time frame now, what do you see? Well, we had the accumulation. You had this last selling volume. We have imbalance to this area of demand right here. So what I would like to see for a further entry is this supply invalidated. How do we invalidate supply? Well, essentially, we just need to break and close back above it, just like we did here. This supply is no longer valid because we didn't make a lower low from it. We made a higher high. That's what we're going to be looking for. If we get a close above this level, that would probably indicate that, this lower low, lower high, lower low, lower high, failed to make a lower low, higher high. That would be invalidated. The strength and momentum is still to the upside. We can look for pullbacks to continue long. So that's what I would look for. You got to be very patient with it. You don't just want to, add to an existing position, because think about it, guys. If you're just trading lower time frame, right? Let's just say you deem that this is a valid level, right? You've accumulated, you've broken out, and you want to trade off this level. Well, if you don't have a higher time frame understanding, or at least a holistic perspective, you wouldn't understand that we're actually still counter trend bearish here. Low, high, low, high, low, high. Could this be a lower low for then a higher high, just pushing deeper into this demand, sweeping sell side liquidity in here? So potentially, that's where people would lose potentially. And then the overall traders who are just patient from the overall zone of interest would probably end up working out. That's why I just don't like lower time frame trading, just because it results in more losses than wins. And psychologically, I just don't want to have to deal with that. I just want to, I don't need 1 to 20s, 1 to 30s. If I get one, sure, great. I don't need them though. Because overall, my 1 to 3s, 1 to 4s, 1 to 5s, 1 to 6s, they'll do me plenty fine. So that's Euro USD. Let's see if I have anything else. Maybe GBP CAD. GBP CAD is a little bit interesting. So overall, yes, we are in an uptrend. We are. That is for sure. I want price to come up into 1695 and 1714. Okay. So this would, yes, we are overall bearish in this sense. However, if we are going to continue with the bearish downtrend, I think we need to push it back up into supply first. However, what we will notice is that on the daily time frame, we have a level of demand down here, right? This is sort of just higher time frame, low resistance liquidity. This was really our last major pullback. So I think that if we are going to short off, we should short off into here before continuing long. So still following the higher time frame structure, maybe just seeing a short-term retracement. We actually have lower time frame equal lows. So this low here and this low here has not been taken out, these lows. And then what happened here is on the 4-hour, we can see that there's a level of supply. We actually sold it from that level back in December. We sold it from that level because we distributed and we broke structure. So I took it on half risk because we still were bullish at the time, but I wanted to take a little bit of a risk there. And we ended up playing out quite well. Ended up taking a lot of partials, moving stop to break even, and of course came up and hit break even to the T a couple days ago. So anyways, starting to react from that level again, and we're pushing down. Now, where could we possibly come into before going long again? Well, it's quite tricky because there's really nothing to say, oh, we're going to go long from this demand or that demand or this demand, because they've all sort of been mitigated already. So we still have counter trends. So if you are going to be looking to trade GBP CAD short, I would highly recommend you just lower your risk on this. But it does look pretty good in terms of continuations. You can see the reaction from the level low, failed to make a higher high, lower low, pulled back into the supply here. See that doji candle right there? Fell again, reacted off this demand, repriced, continued. Created equal highs, liquidity, ran the liquidity, buy to sell into that. Well, we didn't quite make it up into that level. This is why I have both of these levels here. But this is the most recent swing point. Lower low, lower high, lower low. Could we just be in for an overall pullback into this sponsored move to short off? Potentially. That's definitely an opportunity. So keep an eye on that one. Could be in for a nice trade. Maybe reduce risk to 0.5%. I'm going to keep an eye on it and let you guys know. Obviously, those of you who are in VIP, I'll let you guys know. Those of you in the live session, I won't speak to you until Saturday. But we'll continue here. GBP USD. So we're forming more descending liquidity, which is good. That's what we want to see. Higher time frame. What are we doing? Well, first and foremost, we have equal highs. Perfectly equal highs. 1.25 is that psychological level that we'll probably end up hitting. That is also an interesting level of supply, higher time frame. Higher time frame, we swept equal lows, sell to buy. Now we're starting this in another expansion to the upside. So I fully expect price to continue long and hit 1.25. Is it going to do it now? Is it going to do it later? Who knows? Are we going to have an overall pullback before continuing? Who knows? I don't know that. I'm just going to continue to trade with this time frame until it breaks. Right, as long as I have my rules and my system on par. So 1.25 would be that target for me. Lower time frame, we can see the swing high, the swing low, high, low. This is the low that generated this high, which is why stop has to go below that low for this trade. So we have two levels of demand in here. We had one on the lower time frame, looks really good on the 15-minute. And we had one right here. So we had on a lower time frame, actually, I'll just show you. I have time. We swept liquidity. See this low right there? That wick low actually swept that low here. So we generated liquidity on either side of the market. Swept sell side, swept buy side, reprice, continue. That's a level of demand. So if price ends up coming back down, great. I will have that opportunity to be looking to buy this. Dollar is overall bearish, so I still need to be looking to buy XXX USD. We have another level of demand in here, and we did get that fill. We're in a little bit of profit right now. But for the sake of risk to reward, stops are going to be at where the secondary entry is. The reason why I also like this is because, well, for one, structure, high, low, looking for a higher high, but we also have shoulder, head, shoulder. Fake out, entice sellers, and then potentially move to the upside. Well, we also have lower time frame is descending liquidity. So 1, 2, 3 touches. I'm sure retail is probably getting in right now. You're looking at shorting off of this third touch. Have relatively equal highs. So I fully expect price to continue to push bullish. However, if we do get a fall, then 1.2230 would be that secondary position or level for me. If you're not already in this first position, don't enter, right? There's always going to be another trade. Don't enter. But you can enter this one here if we become lower, maybe on half risk or something like that. Let's see. GJ really, actually, let me check up on GChef. Oh, we haven't come into that level yet. Okay, GJ is quite frustrating because I was hoping for a quick intraday swing to the downside. Across the board, pound was looking very weak. And we actually sort of distributed in price here. This is where we had demand. We reacted off of it, made the higher high. New demand in here, reacted off of it, failed to make a higher high, lower low. So this is technically a counter trend trade. It's not overall, with the overall direction of trend, because we are overall bullish. Pound is higher time frame bullish. However, short term, we could be looking to sell here because we broke structure, right? We have more room to go to the downside at this time. If we were to go long, I think that level right there would be necessary, and we didn't quite come into it. So we actually were wedging ourselves yesterday. So that was another indication that retail could potentially be involved in this in terms of a breakout. So what happened? We broke out and then we rallied short. So we trapped the breakout traders long and then we rallied short. So we didn't quite come up into that level. I think we missed it by like a pip or two. So I am deleting this. I'm no longer going to be placing this. I don't see any re-entry possibilities at the moment. Nothing really stands out to me. And if you want it to be more aggressive, then maybe this level in here would probably be fine. However, it just really doesn't fit my style of trading. So I'm not going to be re-entering. I have a good re-entry on GChef, but not on GJ. Even though they are correlated and they follow each other quite well, I still have to go based upon the individual trade at hand. I have to build confluence for each individual position. Let me see if I have anything else. EURNZD. Oh my goodness. Okay, good. So this is good because we hedged our positions. So this is very interesting. And this is where hedging can be coming in handy a lot. So with EURNZD, we are, let me just go to the higher time frame. So with EURNZD, yes, we are kind of bullish, right? We're pushing higher overall. If I go to the daily time frame, you guys can clearly see that. We're making higher highs, higher lows, high, low, looking for a higher high into higher time frame supply back up into here. It's really where this weekly doji candle came into play. Really that indecision before the rollover. So right in here. So that's really where we want to be pushing into. We have one drive, two drives, three drives potentially to the upside, 1.77. If we scale in, what we notice is that, I don't know why it keeps doing that. That should be right there. We have one touch, two touches, three touches. So a lot of people are probably trying to buy off of this retail trend line. I do think that we have the possibility of rolling over to the downside here, or at least I thought, to take out liquidity, come into this tiny little level of demand, maybe back down into where we swept liquidity initially with these equal lows before continuing long. That was a possibility. So within the lower time frames, what I saw yesterday was, you can see obviously lower low, lower high into supply. Didn't quite make a lower low here, but we created relatively equal highs where we swept liquidity, buy to sell. And that's where we started the downtrend again and continued to make a lower low. We actually mitigated something on a lower time frame, but what was the most important thing that we saw? Well, liquidity run, reprice, continue short. So that was that level of supply, which I was hoping to take it off of. In the process, we were looking at taking, there was a lower time frame supply right there. We had liquidity being built up. So we sweep that liquidity, come into these levels and start to fall. But I also noticed that, well, yesterday we had that manipulation short with the news, kind of creating a little weird head and shoulders that we faked out from sell to buy, right? But then at the same time on Euro AUD, I also kind of correlated that with, if I go to the higher time frame, the fact that we actually did sweep sell side liquidity here. We see that 1, 2, and 3 touches. We sweep buy side first, sweep sell side. Now I think we can absolutely rock it. So we're shaking people out of the market first, taking or enticing buyers, coming down, taking their stops, enticing sellers, coming back up, taking their stops. Everyone's out of the market. Cool. The market can continue with where it needs to go. Higher time frame. Yes, we are still bullish, right? We're extremely bullish. Higher high, higher low, higher high, higher low. We did not break structure here. We accumulated, swept equal lows, sell to buy, and that's where we started the uptrend. So this low is the low that created this higher high. So higher low, that's exactly what we're coming into. We came into and mitigated essentially, or filled the imbalance, lower time frame demand if you scale into it. So we're kind of creating a reaction now. Hopefully we can see some follow through. We'll see. But at the same time, this is also shoulder, head, shoulder. Fake out, entice sellers. Hopefully we'll go long. So that's another reason why I hedged my position here on EURNZD. So let's see here. So yeah, we're going to hit my stops most likely on the sells, but on the buys, what happened here? Well, we came into this level of demand. We had equal lows, 1, 2, 3 touches essentially. We started to accumulate. So I guess you could call this at the end of the day accumulation, but at the same time trapping retail traders short with the head and shoulders. So this is how we can offload orders with the institutions, but at the same time fake out retail traders. So sell to buy occurred, higher high was formed above this previous swing point. We pulled back into the repricing, and now we went long. So at the end of the day, guys, if you have confluences for both sides of the market, I'm not saying to just go out and just hedge everywhere you go. I'm saying if you build confluence for both sides and you're unsure, just like this particular example, you're still bearish, but could be bullish because you have correlation and other factors. Well, then you could definitely hedge. So if I lose this on quarter percent risk, which is half total, I would lose 0.5%. I risk this on 0.5%, and we go long, right? If we end up going long and not short, fine. If let's just say we end up hitting my overall take profit at 7.7. Well, that's a 1 to 13. 13 divided by 2, 6.5%, minus the 0.5% I lost. Overall, I'm positive 6%. But let's just say for right now, yes, you would have to have a 72 pip stop loss. So everyone's probably saying, oh, 72 pips, that's terrible. Guys, stop thinking about it in terms of pips. Pips do not matter. You need percentages. Their most realistic overall take profit is that higher time frame 7.7. So this yields a 1 to 13 potential. Okay, so that's a really good risk to reward. And that would be the most appropriate stop loss for this. You can't just place it below here. I mean, you can if you're more risky, but this is the low that generated this high. This is really where we sold to buy. So technically we could have come a little bit lower into this wick, maybe filled it up a little bit before rallying. So anyways, let me just pull up my calculator here really fast. So 72 pips, we are currently up about 78 pips. So 78 divided by 72, 1.08 divided by 2, because we're on half risk here, because half and half. So currently, as of right now, if I were to have closed this position, if I close my position long, I would still be making money from my loss. I'd be up just a little bit more than what I lost on the shorts. I still haven't lost the shorts yet. My stops are still up here, but we'll see. I think that's all I have in terms of my analysis. I guess I can kind of shift it over more to Aiden and see if he has anything else that I may have missed. Let's see where we're at here.
You do USD CAD, Nate?
Oh, right. I can do USD CAD. All righty. Sorry, guys. Do that really fast. USD CAD. Okay. So USD CAD, what are we doing now? We're kind of just chopping, right? We're equal lows, relatively equal highs. I can pull this trend line here. I'm just noticing this now. Look at that. Retail trend line. So 1 touch, 2 touch, 3 touch, we also have equal lows. I would really, really love it if price went long first, because that would give us conviction to short off from our levels because we have equal lows here. So if I just zoom out higher time frame, go up to the 1 hour, we're still trading short from our overall level of supply. We had 2 levels, one at the supply zone and then one at the imbalance. We just got hit on the first one, didn't get hit the second one. And so we got to the T fill, and then we're starting to rally lower. Higher time frame, we're also starting to form, you can say it's a retail head and shoulders pattern. So back up into our level of supply that we're looking to take off, we may actually have reactions from this level, fall, entice sellers, and then moon, because we are overall bullish. We're just seeing a corrective phase higher time frame. This last selling volume before the expansion has not been mitigated yet.
1.3050 is going to be my overall objective on USD CAD. Filling in that, there you go. Yep, that daily down close candle and the inefficiency created with that massive bullish engulfing right there. So we can continue to follow this kind of short-term trend on UCAD to the downside. You can see that we are creating lower highs and lower lows. We're taking our time getting down there, right, which is indicative of a correction, which we can overall buy further discounted price into those weekly equal highs, right? You'll recall, Nate, probably from years ago.
Oh yeah, I remember that.
The equal highs there on the weekly time frame, those will get destroyed eventually.
Yeah, eventually. At some point, we're above the weekly 50 EMA. We're above, well, not quite above the daily 50, but still overall we are bullish, higher time frame. I had 1.321, just the overall start of the last selling volume here. We can see we have not mitigated that level, and in fact, we've created an equal low. We've created two equal lows. One right here, probably better seen on the 4-hour time frame. You can see equal lows here did not take out that low. Equal lows here, sell side liquidity below here. So that's why I still think that we can definitely short off. Counter trend, yeah, we're definitely still counter trend bearish or lower time frame trending bearish. So on the 1-hour time frame, we've sort of distributed and then fell, made a lower low. So that was our pullback into supply. Got the first entry, didn't get the second one. So we can delete the second one now, in my opinion. But anyways, so this could be used as the excuse higher time frame to create just a retail head and shoulders higher time frame sell off to continue to buy up. Enticing sellers, sweep the equal lows here, sweep the equal lows here, and sweep the equal lows down in here, maybe down into 321 or 3050 to then continue along with the overall trend of the market. And I'm not saying to buy it here, guys. I'm just saying that's where we probably want to be taking profit on ourselves and then looking for a price to potentially reverse. And I'm not just saying 1 or 2 candle reaction. I'm saying, you know, an actual structure shift. But that's where we need to keep our eyes peeled to be looking for reversals. So I'm going to scale into the, say, 30-minute time frame. Which I'll probably go 15. So at 15, we're building liquidity on both sides of the market here. So buy side liquidity, and we also have sell side liquidity here. So what happened? We reacted from our higher time frame supply. We rallied lower, right? I guess you could have probably taken it off of here. This would have been, I would say, not as highly probable, but still wouldn't have been terrible. We have seen distribution. We did break structure. However, why couldn't this just be a pullback to continue higher? We were bullish at this time. We were extremely bullish. Why couldn't we have done that? I personally didn't take that. I know some people who did. So congratulations who you got into that area of supply here. But really what I wanted to see was just an overall reaction, the failure to make the higher high and the lower low. Very strong move. So I have two levels here, 1.34419, just the overall pullback. And then really where we had our last buying volume here, lower time frame, where we started to distribute here on like the 5-minute time frame before we rallied lower. So 1.3463. So I have half risk on each of those. So what I would really like to see is that pullback. So if we can see lower low, lower high, lower low, lower high, lower low for that third drive into the low, that would be preferred. And we can see we have equal highs. That would be good to go and attack, come up into those levels, rally short, take out this liquidity, come into our overall objective down here. So that's what I have for USD CAD. I don't have anything short term. Please, I really would not recommend trading right now with USD CAD because what are we doing? We're just consolidating. Don't, force any positions in here. So just be patient.
And remember, there's monetary policy today for the Canadian dollar. I believe that's at 10 a.m. So that should be the volatility injection here for USD CAD as the catalyst to push it out of this little bit of consolidation. So we can take some questions. I did want to share AUD Swiss franc, which is shocking that I'm looking at this pair, given that it's usually a pair that you look at. Let me share my screen quickly.
Let's see, guys. So remember, those of you who are new to this channel, we don't trade commodities. We don't trade indices. We only trade Forex. So unfortunately, I will not be discussing S&P, NASDAQ, US 30 gold, any of that stuff. So I do apologize, but I am specifically focused on Forex. Will the crash course have a section that focuses on SIs, partials moving to break even in different scenarios? Yeah, we will cover that. We'll have a trade management section. However, I already posted a YouTube video on that. So I'm not sure if you've seen that, but I talked about, trade management and all that good stuff there. It's on the Trading Nut channel. If you guys are interested, the title of it, I think even if you just type it in here, let me just see what I can do here. It's called like, shoot, I'm trying to type it in for you so you can have it.
Yeah, while you're finding that, just quickly here on AUD Swiss franc, just kind of from a higher time frame perspective. Yes, we have been significantly bearish for a while now.
Hold on one second. I have
Are
to
you sharing
add to the screen here? Yeah, not yet. So
okay.
search that 2 components that will skyrocket your profits. Search that on YouTube. It should come up with my Trading Nut YouTube video. I talk about trade management and all that good stuff. All right, I'll add you to the stream here.
Oops. All right. Cool. So AUD Swiss franc is just one that I don't typically look at these types of crosses. Typically, Nate is kind of more so interested in that, and the majors. But I did want to kind of point this out from a higher time frame perspective. Obviously we have been in a bit of a downtrend for a while now with the Swiss franc strength, but we are seeing that kind of higher time frame retracement now, kind of across the board on these XXX Swiss franc pairs. And what you'll notice, right, is that we created that initial low, right? We retraced and we consolidated, right? Engineering liquidity on both sides of the market. We had that kind of final purge of this previous low and the accumulation beneath the previous low, and now the expansion higher, shifting structure to the upside for the short term. If you zoom in a little bit further, right, you can see the trading range that's currently being created, right? High, low, now taking out that high and creating that higher high, right? And so we naturally should be looking for overall retracements. That would be great. But for the here and now, and before I zoom in, I just kind of want to point out that I'd like to see as an objective price trade up into this area of supply here. If not, take out this bit of a trend line here, right, which was never really manipulated and liquidity was never taken before the push lower. So we very easily could go ahead and just destroy these highs as well now that we've shifted to the upside. But what I was saying is, for the here and now, I would like to continue trading kind of with the lower time frame momentum, right? You can see that we're kind of creating these lower time frame higher highs and higher lows. So I'd like to continue trading with that, and if that does break, then we'll see that higher time frame retracement. Obviously, this is the trading range that I was referencing, right? The high, higher low, higher high. So we very well could see some sort of overall retracement. I don't really see anything that kind of piques my interest. Perhaps this area here, right? That bit of a supply to demand flip, right? But really just getting down into higher time frame discount for that third drive cycle into the high, right? But until then, I'm going to look for this lower time frame price action. This is just the natural level that we should be looking to play off of, right? The down close here, creating the higher high. Now, this to me technically isn't structure. This is just a bit of manipulation, the down close sell to buy. This is really kind of that area that I would classify as the trading range on the lower time frames here. So really from this low to this high, we very well could still run out this internal liquidity here and maintain and trade higher. But this is going to be my point of interest. You can see we're just kind of trickling down here. I'd really just like to see that lower time frame sell to buy and the continuation higher. All right, so that's just an additional cross that I wanted to point out for you guys. I'll go ahead and stop and see what other questions have been put in the chat. Let's see. Nate, you're muted, bro.
Oh, that's embarrassing. All right. Essentially what I was saying, Brian, yeah, it is a good video. However, it's tough because every single setup is going to be different, right? There is no such thing as a step by step to the T. If it was a science, then trading wouldn't be, it just wouldn't, it's just not how it works. It's an art, not a science. So everything is going to be different, but you need to just have a basic understanding of what to look for. You know, just kind of think, okay, if you're in sells, where could price potentially reverse from you? It's not going to be the exact same thing every time because the charts will forever be different for each individual setup. The overall components will be the same, but the thing is you're not going to be perfect every time with it. It may hit your stop loss at break even. You may not take partials at the right time. You may take partials too early sometimes. It's not going to be 100% streamlined the exact same, and you're going to just master that component to a T every time. It's just getting a general understanding of where price could potentially reverse from you. And that just goes based upon where liquidity was taken, where the other supply and demand zones are, where structure is. So if you're in sells, where did price sell to buy potentially? Is there a sell to buy that could go against you and you can mitigate and go long against you? Where could the structure possibly stop or break or wherever, or the nearest supply and demand zone against you or something like that? Where could price reverse? So we'll try to touch base upon that as best we can in the course. However, again, what I want you all to understand is, guys, there is no such thing as a pure step by step. You won't find it anywhere. That's not how the markets work. That's not how investing works. If it was like that, if it was down to a science, then everyone would be rich. Well, actually, there wouldn't even be a market to trade. The markets would cease to exist. So, we'll try to do our best, but it just comes down to practice and time to, develop sort of the intuition and kind of see where you need to be kind of moving, stop to break even, all that stuff. I don't get it right all the time. It sometimes misses my entries or misses my partials levels or stuff like that. I'm not perfect, but I've developed, this skill over time, and I practiced for years and years and years. So it'll just take time. But yeah, Brian, we'll definitely hit on that.
You have to be able to develop out the habits, the muscle memory, that in order to have the repetition and the consistent application of the concepts and the logic over time.
Yes. Let's see. Best time frame to enter a trade. Oh, goodness. So I'm trying to be as nice as possible here. There is no best time frame. All the time frames have equal weights, right? We need to have a holistic understanding. Sometimes I look at the 45-minute, the 30-minute, the 25-minute, the 20-minute, the 9-minute, the 7-minute, who knows? I just keep zooming in and zooming out based upon the understanding of the higher time frames, and I zoom in to see, where liquidity was run, if liquidity was run in the first place. What you don't do is you don't just assume the principles are always there. There's not always a liquidity run at the specific level you're looking at within the trend. If there is, great. You can zoom into that and kind of take a look, but there's no specific time frame. You have to have the holistic perspective. You have to keep zooming in and zooming out. Price is only being delivered one way. Price is only moving one way. So it's just, are you zoomed in or are you zoomed out? The 1 hour time frame is a zoomed out version of the lower time frames. Same as the 1 hour time frame is also a zoomed in version of the higher time frames. So
it's a matter of perspective.
It's just a matter of perspective. So there's no specific time frame to trade. And I would recommend, just based upon that question, I would really recommend that you maybe not go, if you are trading with live money, I would probably recommend you don't do that, because it just seems that maybe you don't have the right understanding as of yet. Maybe try to go demo. I'm not sure where you're at in your trading though, but just based upon that question, I think that maybe more experience and knowledge that is best for you going forward. And I'm just straight up with people. It's just what I believe, because that's the only way that everyone's gonna learn, is if I'm just real. Let's see. Is it possible to do 20% a month? It's possible, but don't have that be your goal. I mean, that's 20% a month. What is that? Like 240% a year? I mean, it's kind of unsustainable in the long run. Just follow your rules, follow, what works for you, use good risk management. And if you happen to hit a 20% month, then great. But don't think that, I'm only at 4% for the month. I got to hit 20. So now I need to over leverage my next positions to finish off the month. No, don't do that. Let's see. What's the ideal capital to start with in order to comfortably execute 1% risk management according to smart money for a sort of trader? Really anything. You just got to, based upon that question, I'm assuming you may not have a ton of money to deal with. So I would recommend, maybe just a few hundred. That's fine. You really just want to get involved in the market, And maybe even, I mean, you could start off with a small live account just to have that psychology on your side, but just get used to good risk management. Don't worry about the money, right? Even if 1% or 2% is still a 0.01 for you, we'll just use a 0.01. All you're doing is just building the skill, right? Yes, you need to use good risk management, but I wouldn't worry too much about the amount of capital you need to have. Focus on developing the skill first, because you can trade with any amount of money. It won't really matter. Let's see. What are good signs?
You can't do 1% on a $100 account. You can't do 1% on a $100,000 account.
Yep.
Simple as that. It's all just percentages.
Yep. What are good key signs of a good supply and demand setup? So this is a very broad question, but I think I can probably answer it. Let me share my screen really fast. So let's just say that, you know, let's say we're in an uptrend. What do you want to look for in an uptrend? You want to look for demand. Note that there's not always going to be a demand level. If we're going like this, if price is just trickling and trickling and trickling, and now we start to pull back, where's the demand in here? There's nothing. And, you know, many people would just be like, oh, let me just pull a fib. Let me just go to the 61.8 and place my order. You can do that, but that's just, you know, you want to build as many confluences as you can. So really what a good demand level is, or if you're in a downtrend, a good supply level is a level where the counter trend breaks and it flips from, in this case, supply to demand. So let me just kind of go back out of here. Let's just say that's a 1 expansion, 1 pullback, 1 expansion. So we're looking for a third drive to the upside. So let's say with this pullback, we have right in here, we have a low, a high, a low, a high, a low, a high, a low, a high, failed to make a lower low, a higher high. You want to see really where the last selling volume comes into the market before the expansion comes into play, or really where the counter trend, if there is one, or if it's clear, where the counter trend breaks. So here's supply. Maybe we come up into supply. Cool, that's validated because we made a lower low. Again, a new level of supply. Maybe we come back up into it, lower low. Okay, that's validated because we made a lower low. New supply level. We push up into it. Oh, we don't make a lower low and instead make a higher high. So now the counter trend has shifted. Now this becomes the valid level of demand because the supply was invalidated and now it flipped to demand. So that's really where we can be looking to take a trade off of to go long, right? So if I just zoom back out, actually, let me go to Euro USD really quick. So with Euro USD, remember, we're in an uptrend. So where did the counter trend? So after we've made this higher high from this level here, where did the counter trend break? Well, of course, we had our overall market structure. We had liquidity principles on our side, right? Trend lines sell to buy, right? So we know we're probably not going to come below that low. And if we do, well, then we'll just have to reevaluate. But that's the ideal setup. We came into a level of demand. So why is this demand? Why is this a valid level of demand? Look at the counter trend. Low, where do we start to pull back? Right here. So that's a low. Where do we stop? Right here. Where do we make a lower low again? Right there. Where do we pull back? Right there. We came into this level of supply. Let me just kind of zoom into this level here. This right here is supply. This last buying volume, we mitigated. This is supply. We came up into it again. This is supply. Last buying volume here. Lower low again, pulled back up into that supply. But we did not make a lower low again. We didn't continue with this pullback. We stopped and now we started to rally. So that last selling volume will determine that level of demand. However, you don't just want to be like, oh, okay, well, here's supply. Let me just go and short it here, like after this move. Well, you don't want to do that because we're in an uptrend. So what do we naturally expect in an uptrend? A higher high. You don't want to be selling at supply in an uptrend, nor you don't want to be buying at demand in a downtrend, because you would naturally expect price to make a lower low instead of a lower or a higher low for a higher high. Because if you're in a downtrend, you want to see lower lows and lower highs. Same thing in an uptrend, higher highs and higher lows. So that's why in here, let's just say we stop. Let's just say we stop and go like that. Well, that would be a low, a high, a low, a high. You can see the supply reaction here. We come lower. If we fail to make a lower low and we make a higher high, then this supply will flip to demand. Now this will become the last selling volume before the expansion to the upside. Now we can pull back, mitigate, and go long. And that will finish off with the accumulation. within this level of demand. And we can just see it's just basic structure, higher high, higher low, higher high. That's what we're looking for. So I'm in this position now. Stops have not been moved to break even yet. We need to break the high at least. So I'm looking for there's a stop and then a higher high. If we get that, then we can get a potential additional entry. If it doesn't and it rolls over and hits my stop, oh well. But this is a very fine setup in my opinion. It's going with the structure. We have a lot of confluence. So we'll see. Oops, didn't mean to push that button. Let's see, any other questions here? Or did you guys start on your journey in trading? We started just like everyone else. You know, we were just normal people. You know, we were idiots when it came to trading, quite frankly. My first trade, I didn't know what I was doing. It was almost 5.5 years ago. I think back in 2017. Took a trade on Bitcoin and blew my account. First trade ever. Didn't understand anything. We just did it just because I was interested. And it just came down to practice. Just came down to passion. If you don't have passion for trading, you shouldn't be trading. If you don't want to do this full time, you shouldn't be trading. If this is a side hustle for you, you shouldn't be trading. It's either you're all in or all out because you're either making money or you're not. So how to make money consistently is if you treat it like a profession, treat it as a career, treat it as a business. So I was lucky enough to meet my mentor about a year into trading. And he really taught me everything he knew. And it really just came down to consistent failure until you made it, right? It's going to take time. It's not one of those things where you can just take a course, apply it to the charts and become this instantly profitable trader. It's not how it works. It takes months to years of practice in order to get really, really good at it. So that's why so many people fail, is because they have the wrong psychology. They have the wrong mindset coming into it. They think they can flip accounts. They think that they can, get rich quick. And if they take a course or take signals, that they expect to just immediately make money from it. It takes consistent failure, but never giving up on it, finding the right education, how the market actually moves, and getting the right mentorship. Can't stress it enough. And it's not me trying to sell you guys on anything. I'm not here to do that. I'm here to just provide analysis for free. If you don't want to take part of my community, I'm not saying you have to. I'm just saying that the best way to go about learning something and shortening your learning curve is to get help from someone who has already been doing it, AKA my mentor. If I were to do it myself, it would take me a hell of a lot longer to become good at it, right? So that's why finding mentors. I mean, every multimillionaire and billionaire has a mentor, really, in some way or fashion. So it just takes time. It just takes experience. There is no secret sauce. There is no golden strategy. There is no, one thing that I can tell you that will just automatically make you a better trader. It's all just time and experience and progression, getting help, understanding the right content, not being taught the bull crap trend line and everything like that. If you're taking courses on all the retail crap, get rid of it. It doesn't help you at all. It's not the way the market moves. Is $200 enough to comfortably manage 1% risk? Yeah, I mean, that's good to start. Sure. Yeah,
it depends on really what's your goal there? Is it to learn how to trade and apply the concepts on a live environment, or is it to make a living? Because you're not going to make a living off of a $200 account, right? So really, trading a small live account is absolutely helpful and critical relative to a demo account, because there's live real money on the line, right? Even though it's a small amount, you're still applying the concepts in a live account. It's a different ballgame when live money is involved and the psychology that comes with it. So if that's the purpose, then yeah, absolutely. But it shouldn't be to try to make as much money as possible from a $200 account.
Right.
I'm running out of time here.
Because let's just say you want to make $200. That's a 100% gain. You think
right.
Hedge funds who manage billions want to flip their investors' accounts? It's not what they do, because it's professional to have an understanding of the entire sense of how risk works in the market that you're currently involved in, and benchmarks. If you just get 1% to 2% a month, that may seem like complete crap to you all, but in all reality, that's what's made me very well off. in terms of investing for the long term. 1 to 2% a month is 12 to 24% a year, compounded over 10, 20, 30 years over the long term. Multi-millionaire guaranteed. Anyone can get rich, guys. I don't think you guys don't understand. Anyone can get rich. It's just, are you willing to do it the right way? That's really it. Which indicator do I use? I really don't use any indicators. I mean, the only thing I use, when I'm looking at accumulation or distribution is the VFI, so volume flow, and then the 50 EMA, which I hardly ever use, but it's just there to kind of guide higher time frame bias in a sense. Ryan, I already did GBP USD. Just go back and watch the recording. I think it's probably within the first 15, 20 minutes of our live session today.
Brian, we're kind of running out of time, so why don't you send me a message on Telegram, and we'll schedule a one-on-one and go over all of that, so I can take a while to explain.
Yep. I do my entry on 1 minute and seconds time frame. Oh gosh. Well, you need a holistic perspective. You can't just zoom into the 1 minute and look for the BOS, because that doesn't mean anything. You have to have a holistic higher time frame perspective. Everything needs to kind of come together. I don't trade the lower time frames like that, so I can't really help you. But I mean, everything, the same concepts apply. You just need to have a holistic perspective in the market. Can I access the trading community? Are you in? Is it free? No, absolutely not. Our value that we bring to the table is unlike anything else in the market. So unfortunately, we do have to charge for it. We do require people to schedule calls with us because we are very serious about who we work with. We don't just accept anyone and everyone who wants to come on board. We have very specific criteria that our potential clients need to have, and certain characteristics and mindset before we work with them. Because we will transform you guys into professional traders over time if you are willing to be coachable. However, we can easily spot people who are not coachable. And that's where we just say, sorry, it's not the right fit for us. So that call can be booked on our website, arielfxtrading.com. It does require an investment in your education. If you guys do not have the financial means, I'm sorry, but that's just not going to help. You need to be able to put away the funds and focus on the educational part. But at the end of the day, it's all just a one-time off payment. We do have payment plans available. But the other thing is we don't do upsells. So all the courses, just like I said before, all the courses that we create in the future for all of our existing clients are just going to be given to them for free. But we do have to charge for the value that we bring, unfortunately. I've been trading for 2 years and I've blown multiple accounts over 25K. I joined Ariel Fx VIP group 2 months ago, and now I'm a funded trader. Best thing I've ever done. Thank you. I appreciate it. Appreciate the love. Greeting from Pakistan. Nice to have you guys on.
Love to hear it. Love to hear it.
Let's see. All right, last minute questions, and we're going to head out for the day. Hopefully you guys took some value from this. I'm sorry there wasn't a ton of setups. We kind of already are in a bunch at this current time. If you are interested in keeping up with everything that we talk about throughout the week, our VIP program is open for you to potentially qualify for. So any other last minute questions here? Who are you funded by? MyForex funds and FTMO. So I don't get a trade unless it's 1 to 10. Yeah, I mean, if that fits your personality, yeah, awesome. Well, yeah, more power to you. The cheaper the trading program, the less legit it is. Yeah, I could say that. You could say that. However, what I would recommend, and this is, where you could go out and try to find your own mentor. I don't even have to be your mentor. If you don't, resonate with the type of style that we trade with, I'm not telling you have to, but it's open for anyone interested. So what I would recommend, if you're looking for someone to mentor you going forward, if you're very serious and passionate about trading and want to do this full time and understand that it is a long-term game, look at these things. This is what sort of I tried to look for, and what my mentor said that, would really help in terms of understanding, who you should be in your network, in your circle. Look for people who have credibility. Look for people in terms of trading. Look for people who have track records. Look for people who can prove to you that they can do this consistently, whether that be through my FX books, whether that be through an actually valid track record, like an audited track record, whether that be through or just the analysis that is posted in the group. If the mentors that you come across are only selling courses, probably not legit, because anyone can sell a course, but you have to be able to back it up with mentorship and actually teaching people and providing analysis and all that stuff. Another thing is if people consistently upsell you, oh, I'm coming out with this new product here, you have to pay for this in order to get more value. They're only in it for the sales, guarantee it. I've been a part of it years and years ago when I purchased so many different things when I first started trading, and I was a part of a lot of scams, people just looking to make a quick buck. We don't do upsells. We have track records available. Just trying to give people the peace of mind, knowing that if you're looking for someone, then we are that group that we could really help you. So, but again, all up to you. If you don't feel like you need it, and there's a lot of sessions help you a lot, great. Look forward to having you guys on next time. All right, awesome. I appreciate you guys. Well, I'm going to head out for the day. It was great to talk to you. We will not actually have a live session this Saturday. I will be busy this Saturday, so we will not have that. We'll have our next one next Wednesday, and then our final live session the following Saturday, and then we're going to be done for a little while. So be sure to tune into those. We will post a Smart Money Sundays this Sunday, though, so keep an eye on that on our YouTube channel. So yeah, have a great rest of your day, and we'll talk to y'all later.
Cheers, everyone.
Cheers. Take care.